All right, everyone, here we are with another video with Invest for Tomorrow. We're going to talk about the S&P 500 index, ticker symbol SPX. One of the videos most overlooked by many viewers and investors. No, I'm just kidding. But it's a video that a lot of people don't know that I do. So if you're coming across this for the first time, it's awesome that you're coming across this. There's some great information here. And if you're a subscriber and you just noticed this, I'm really glad because I post this at the end of almost every video. It's in the description of every video of the most recent video that I do. And there's some great information here. I've been following the S&P 500 index since June and July. Actually back to May, but I started doing videos around June and July. And here we are seeing the effects of the pump. I always talk about what these dates, signify, what's probably going to happen. And according on how it happens, I'm not here to tell you to buy an individual ticker symbol or a specific stock or the S&P 500 or the SPY. I'm not here to tell you to buy, sell, or hold anything in particular. I'm just here to share with every single investor the great news that there is an opportunity to go ahead and maximize profits and minimize losses based off what the charts are showing and how they're reacting. So we're going to look at them in just a moment. There's a lot of people saying, is there going to be a market crash? Is there going to be, the 2021 fall and so forth? So I don't know if you guys are aware, but this last week, Jerome Powell spoke, and I kind of briefly have seen different articles and stuff talking about it. And just to not go into much detail into that, because I don't know exactly what happened. If anybody wants to write down below their thoughts on that, you're more than welcome to. But Jerome Powell basically said that the first quarter, or at least the first 3 months, or first half maybe, even it could be a little bit longer, up to 4, 5, 6 months of 2021 is going to be a little bit difficult. We're having trouble right now with stimulus. Stimulus talks are also sparking up this hope and run here, right? And also, it's looking like it's more closer to happening than not happening. So we got to see what's going to happen. There's going to be articles about that all over the place this weekend or leading into Monday. And that's going to give us better insight on how this is going to continue. Another thing too, the pump dates based off of the ones that I have here in the information that correlate with the graph is showing that it's going to happen till the 14th of January. So we're kind of seeing pumps till the second week of January. So for now, even if the market's going down or up on these scheduled dates, you could see that the S&P 500 index rises. And if the S&P 500 index is rising, there's individual ticker symbols rising up with it. So back to Jerome Powell. So he said that the first half is going to be a little difficult and so forth. But then again, he talked about inflation. He doesn't see inflation going over 2%, which is pretty interesting as well. And he was just talking about the fact that, everything seems like, the house market hasn't been hit really that hard. Like he says it got hit, but it hasn't really been hit and it's going to continue the same. Like he was just saying like everything's going to be, up to this point, it's looking like everything's going to be all right. But the first half is going to be a little bit hard and we need a stimulus to continue flowing the economy. If not, there's going to be some pitfalls. But it's not like there's going to be a market crash. I don't think he was seeing any signs of anything like this. I mean, we could probably have a slight slippage, right? Like here, like we had here or here. But as it was slipping down, I want you guys to pay attention. There was still pump dates, and on those pump dates, the stocks were going up, even on the way up, even on the way down, and then back up. So you want to pay close attention to these dates. These dates are actually a great way. It's helped me this year. For as long as the Federal Reserve continues to do this, I'm going to do videos on this, and it's going to continue to help us as investors have an opportunity to maximize profits and minimize losses. You got to look for yourself at the chart, where our circle and what's going on, for you to go ahead and say, okay, well, there's an entry at some point and there's an exit at some point. I'm not here to show you guys that. I've stated examples before, but that's not the purpose of this video. I'm not here to tell anybody what to buy, when to sell, how to hold, what to buy, how to hold, buy, sell. Not that. I'm here to enlighten you on all the great information that I've seen, there's a direct correlation in how much the S&P 500 index is rising on these dates, and then how much individual ticker symbols are possibly rising due to these dates. And that's anywhere from like 30 cents to $3 and sometimes even more, right? There's 500 ticker symbols to choose from. You have more than enough different ticker symbols to research and check, and then correlate them to the dates, and then you do your due diligence from there. Now, because an individual ticker symbol goes up several times or most of the time with these dates, or down, however it does it, doesn't mean that that's the same effect you're going to receive in the near future. So that's something you need to be aware of as well. Just because one of them went up on one of the pump dates or several pump dates doesn't mean that it's going to continue. You need to see also in what state of innovation or state is the company in, their balance sheet and everything, to just make sure that you're not getting yourself into something that might be on its way down because of bad news and so forth. So you want to do a lot of due diligence and research before deciding an individual ticker symbol. And then you also want to look at the SPY. You want to look at the S&P 500 index and figure out the dates. But let's see here. When's our next pump date? Our next pump date is on the 22nd. Today's the 20th. The 22nd is this Tuesday. So we have uncertainty on Monday. We're going to talk about that in just a moment, the possibilities and what to expect for Tuesday. The most recent one was on the 15th. And here you can see that it's going to be pumps until that week on the 114. That's the next scheduled date of the next pumps to come, if there is any, or to tell us, hey, pumps are done, no more. And that's going to be something interesting. But for now, we're still scheduled in till the 14th of January. So the 15th, right, was here. The 14th, it was falling. That was Monday. And it led into the 15th. So the lows of the 14th, I'm going to talk about that in just a moment, was 36.45. And this ran up all the way up to this point right here. That's the 15th right there. 36.95. That was a 50-point jump from the lows of the 14th. If you want to start from the lows of the 15th, which was this candlestick right here, it was a little bit higher, 36.53. That's still a 42-point jump. There's individual ticker symbols rising up with this. So I said on Monday, if it fell, it would come back up and level off. And that's exactly what it did. It leveled off with the previous highs. That's what these pumps are here for. And if they don't do that, they get this to newer highs because it attracts more investors, more enthusiasm. And then when people look at the chart spread out, they're like, oh my gosh, the S&P 500 index, all it's been doing is rising. Let's jump on into some blue chip stocks. So that's what also creates that effect. So what are we going to expect now for Monday leading into the 22nd, which is the next pump date on Tuesday? So there's two ways this can go. I talk about these two ways because these are the only two ways it could go. Now, according to how it goes, the reason why I draw it and why I explain it and illustrate it is because you as an investor will have to watch what's going to be more comfortable for you and what works for you, right? According to these scenarios. So Monday, there's two ways it can go. It continues the run and anticipation, and it levels off. It levels off higher than where it started, gets above this point, and we're kind of right there. On Tuesday, the pump will come and it'll bring this up to newer highs and new resistance levels. That could be one possibility, right? So you want to watch how it reacts on Monday. Monday's very important because it's what tells you where this is going to start and where it could go. And then the other scenario, which is close to the one that just previously happened, is that it falls, levels off, and what happens is on Tuesday, the pump brings it up either slightly above the breaking point of breaking even, or gets it right back around that same area like we can see here, right? Or it brings it back up and it kind of levels off around this area. So it kind of just comes back up and it doesn't make it, right? It kind of just sits a little bit below it, and then the rest of the week we'll see the effects. But for the most part, these pumps usually bring it back up right there to break even, and be around the same area, or actually break through it and hit newer highs or get back up to newer highs, right? So those are the two scenarios that we want to watch for, pay close attention to. And then as an investor, you need to rationalize after doing your due diligence and research and seeing the chart, how it reacted on Monday or in the hours of Monday early on and how it's about to end, to see what it is that you're going to get into and how you're going to play it out. But it's not like you have to get into the market. If you don't feel comfortable, sit in the sidelines. If you know how to paper trade, which you have access to that, almost every investor does, their brokerage should have it. You can see for yourself how it works, or just watch it and see it without investing anything, just to understand it if you don't quite understand what I'm saying. But I mean, this has been a track record for almost 4 months now, or more actually, that we've been watching how these stocks are rising up on these dates. I circle every single one of them so that everyone can see how many points these are going up by. They go up by anywhere from 20 to 50 points, and the high end of things is like 70 to 100 points per pump date. And then there's individual ticker symbols going up 30 cents, $3 a share, or even more. So do your research, do your due diligence, rationalize based off the information. I hope you guys found this video helpful and informative. Please do so and subscribe if you did and you are a first-time viewer. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money.